Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Wednesday, October 12th, 6:56 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Not a lot going on. Bitcoin up about 1%. Equities up about 0.5% across the board. Over on the macro front, of course, today we've got producer prices at I think it's 8:30, and we've also got a grain report in the afternoon. Some of us are holding wheat and corn long positions. We had a little pop in wheat the other day. They've since faded that. So coming down to the wire, I have October calls in both corn and wheat, so need to make a decision on those soon. And then we've got consumer prices tomorrow at 8:30 and retail sales on Friday. I believe that comes out after the market opens. Have to check that. The big thing yesterday on the macro front, we had a nice little rally going on after an initial dip. The market put in a nice bounce, probably starting mid-morning up until the 1:30, and then the Bank of England dropped a bombshell, basically warning pension funds and bondholders, institutional bondholders, etc. Hey, get all your bond positions rebalanced and everything, because we are out supporting the market on Friday. So don't expect us to, step in after that. So that sent a chill through the markets, and then we had a big rug pull, basically giving back most, if not all, of what we did. I mean, great. If you're a sharp intraday trader, you had a lot of intraday volatility yesterday to play with. Hope you did well in that exercise. But I think the real action is going to come here with PPI and PPI today and then CPI tomorrow. I would expect a lot of intraday volatility. And I would say if you get a positive reaction, I would say buy that. I think the big tell will be tomorrow with the CPI, but there may be an initial reaction off of PPI. So again, we'll have to just wait and see. Of course, trade level to level as always. So let's run through here. What I want to do today is, of course, hit all our short-term active trader charts, but then I want to zoom out quickly and show you where we're at on these charts on the daily, and in some cases even the weekly charts, as we approach really, really important levels. So yesterday, dollar stable, still in this little uptrend here off of this corrective activity. Stable yesterday, not a lot of action. Same thing with bonds, TLT, just hovering, stable yesterday, not a lot happening. VIX was up 3.6%, again, right in this range between 36 at resistance and 29.30 as a support zone. So, I mean, right in here, really anything can happen, and the door is certainly open for whether it be today, tomorrow, resulting from the macro numbers, or even something bizarre out of the Bank of England, more contagion type stuff, for a spike move higher in the VIX. Bitcoin still hovering 19,000. I've dropped in a downtrend line. Of course, if there's some kind of a rally and you break this downtrend line, then I would say, given the length of it and the time below, any kind of breakout above, would open the door for another move, at least up to 20,000, but most likely 21,500 on some kind of a breakout above 20,000. So you got that to work with. Oil, we talked about yesterday, the breakout, the 38% fib retracement. Now I really think 88 has to hold right here at the pivot point for oil to maintain this upward move. And then, so I would have 88 alarmed on the downside, and I would certainly have 95 alarmed on the upside for a breakout. So those are the key levels on oil. Oscillators didn't do anything at all, just hovering here, minus 40. Same thing with the NASDAQ oscillator, no activity whatsoever yesterday. If we move on to SPY, we're bouncing along here at the bottom. I think we really need to recapture 362.50 to get that first initial recapture of a main level. And if we look at the 60-minute chart, you'll see yesterday, we undercut it. We were up here. We gapped down on the open, kind of had that scary first hour and a half of trading. And then this was the rally that was going in. And then at 1:30, 2 o'clock, they pulled the rug on that Bank of England scare. But you can see from a technical standpoint just how critical these levels are. We came down, we revalidated this low at 357.50. We put in the rally and went right to that first resistance, that 362.50. So, from an active trader standpoint, if you just want to boil it down, you buy support and you sell resistance, right? So, yesterday, although you look at the net result of everything, minus 0.6%, but you had $10 of travel, right? You, after that gap down, you went down to 357.50. You had a $5 rally and then a $5 rug pull. So, even if you don't get 100% of that, if you're actively trading and you're watching these levels, you've certainly got objective levels to shoot against, both on the long and the short side. So $10 of travel is fairly significant on a run-of-the-mill Tuesday. If we move on to the Qs, we took a leg lower. I really think we've got to get back to 270. I think that's the main kind of go-to pivot. And the reason I put it there is because of this low back here in June. So we had the rally, we came back, we've undercut it now. And if we move on to the 60-minute chart, we've got, so yesterday we had very much the same kind of price action. We gapped down to support at 362.50. We rallied up $5 to 267.50, where we met resistance right here at this low. And then, just like SPY, they pulled the rug $5. So again, $10 of travel right here. Definitely today, you got to hold 262.50, or you're going to come down here another $5, I would say, and be looking to tag the bottom of this downtrend channel. And you can see just the general principles and action, right? Bottom side of the channel, midpoint acting as resistance. Little breakout, came down, lost the midpoint, and now we're carving out below the midpoint again. So I wouldn't be surprised to have at least a tag of the bottom here. So it's really critical that price hold this 262.50, and then if it can take out this 267.50, then you've got a path up towards 272.50, where you've got the first really large volume over price bar, and you can see support, more or less resistance, little bit of support here, but it gave way. But you can see the importance of this line here at 272.50. And what makes that level even more important is, of course, it's the top of the downtrend channel. So you break out of that, then you could potentially get some running room there. Wide-ranging day on IWM. We took a look down, we came all the way up, and then we closed basically unchanged. If we look at the 60-minute chart, here was the that scary open. This one would have been tough to get that bottom because it didn't. It stopped at a like in no man's land. It did not come down to 164, which would have been your really objective buy. So when it does that, your net, if a price reverses at a non-conventional location, non-objective, then your first opportunity is to buy a recapture, and that's what happened here at 167.50. So you had $3 up to resistance, and then $3 down on that rejection there at a very, again, that's why I draw the lines right where these other touches happened. Rejection, and then another rejection here at 170. So today, I think 167 is your obvious pivot point. Meta, bad day at the office. There was a news flash out yesterday that Russia put Meta on, what did they call it? It wasn't a terrorist organization. It was, I don't know how they termed it, but it wasn't pleasant. It wasn't a good list. And I think that had something to do with this big rug pull. But regardless of what the reason is, you've got to hold this 128 or you're down below the channel. And you can see that we're almost at the measured move from this $8 range down here. We're down $6, so it's a well on its way. And I wanted to show you the daily chart on this. We've got a trend line coming down. We're already below the COVID low. I mean, just think about that, where we were 2.5 years ago. We're below the COVID low. And if we go out to the weekly chart, I mean, you can see here was the COVID low, and now we're coming into remember the fall of 2018 was the Jerome Powell, everything is on autopilot. The market was down, 20% in 3 months. That was this low right here in December of 18. So now we are down, approaching that level at 125. So this thing has really, really fallen apart. Moving on to Apple. Little rally kind of in here. You got a value range going on. Bottom of the channel here at, let's just call it 138, has to hold kind of a thing. If it does, we can bounce back to 140. I think 140 is your main pivot here, and you've got 138 as support at this low. So I would certainly want to see 138 hold. Now, if we go out to the daily chart, we're still, well, 130 was the June low. So let's just call it $8-9 above that level. And, on the daily chart, I'd want to see, 137.50 hold. So you can fine tune that however you like. But, if that 137.50 doesn't hold on the daily chart, then you've got an open door down here to 130. When we go to the Tesla 60-minute chart, remember yesterday that we have been talking about this break here at 235, came down to 220 and put in a long consolidation, and then it broke yesterday afternoon and quick move down. And again, those principles, we had a $5 consolidation range from 220 to 225, and then when it broke, you got that $5 in one bar. So that was your measured move target, if you will, from 220 to 215. So now what I want to show you is where we're at on the daily chart on Tesla, and we've got our high volume over price bar here at that 235 level, and we've since broken that, and now the June lows, May and June lows come into focus at 210. And, just given the chart, not a lot stopping this, honestly, to come down to 210. And then there will be a major decision point there at 210, whether it breaks that level. And since we got a moment here, just show you the weekly. Toggling here around 220 on the weekly. You can see there was a ton of weekly support back here at that right around that 220, 218 type level. Actually 215, I'm sorry. That's where we're at right now. So we're at weekly support. We we do have a little extra support coming in here around 185, but then we've got another much bigger level here down at 160, carving out a range here to 125. And you can see back here the pre-COVID high was all the way back at 60. So that would be a scary thought for longs if we were to somehow find that pre-COVID high. Moving on to Microsoft, we had lost this 227.50, and so now, we're plumbing 225. You got to get above 227.50, or you really got nothing cooking, and the door would remain open for lower prices. And you can see we got this measured move target. We talked about that yesterday. Had this trading range. It broke and came immediately down to here, held for a couple hours, and then broke yesterday. Tried to rally back, but then failed at resistance. I want to show you the daily chart on this. Ugly. Here was the June low. we're well below that now, down in the 225 range. And if we keep going out to the weekly chart, you can see there's a large volume over price bar here that comes in at 215, more or less. And we've got this 618 retracement of the whole COVID low to high move. So you take your tool, go from low to high, that gives you that 618 retracement level. See if I can pick that level off. It looks like 213, right in that area. I'd have to blow that up and check on it. But then you see if that can't hold, you're down into 198 type area with these two large volume over price bars. So, this thing needs to find some support soon. I would imagine it would be right in this 220 area for at least a hesitation, unless, of course, just the whole thing falls apart. Interesting price action yesterday on Amazon. Why? We gapped down, undercut these prior lows, then they reversed it. Again, stopping in more or less no man's land. Your first opportunity to buy was the recapture of 112, and then that gave you $3 on the way up, right to the midpoint, right to well-defined resistance. Resistance all in here, midpoint of the box, and then back down to 112. So 112 is your pivot today. But if we go out and look at the daily chart, you can see that 115 is really, really important. And we're currently trading below that 112.50 as it stands now, until and unless we can recapture 115, the door will remain open down to the next big volume over price bar at, let's call it 106. And then you've got all these June lows and May lows down at 102.50. And, if things are falling apart to that extent, just from a technical standpoint, you usually see the prior lows validated, even if it's just for a touch. Like this bar, you see this long wick bar, a scary move, come down and tag 102.50, and then right back up again. So bulls got to get it above 115, and I would say in this particular trading range, 115 is your key pivot level. Moving on to Google, same exact kind of price action. Right down here to the bottom of the trading range, undercut 97 briefly, came right back up. That was your objective buy. Why? Because it recaptured a well-defined support line. And then you got a $2 move up and a $2 move back down, right to resistance, that well-defined line that's been there forever. Support, resistance, resistance, resistance. So 97 has to hold, and bulls got to take out 99 to open the door towards 101 type area. Actually 100 first, and then like 100 spot 75 for the gap entry if we get an up move. I want to show you Netflix, just disaster. This thing has liquidated literally $30 in just a couple of days, down 7% yesterday. showing you, a couple of things. One, we talked about this coil, and I was optimistic that something was happening here because this chart looked totally different than the other charts in terms of there seemed to be steady buying at this 234 level that had, it was consolidating within this triangle. And, but it turns out the bulls were running out of energy, a series of lower highs. And then we built this triangle. We undercut it, came to support at 224. And then you got that classic back test, right? Breakdown below the triangle, come back to touch the triangle for, revisit the scene of the crime, back touch the breakdown, and then it just absolutely let go. And we are back down to the prior lows here at more or less 215, let's call it. But I wanted to show you the significance of this breakdown on the daily chart. We had 3 months of ping-ponging between 165 and 205, that $40 wide range. We got the breakout at 205, right? And so the measured move was $40, and we got that to the button almost. 40 onto 205 gives you 245. We had a couple of little baby fake excursions trying to get into that gap and couldn't do it. Back down to the bottom of the box. You got this large volume over price bar here, and then you've got gap resistance here. So bottom of the box, long consolidation. Top of the box, rejection. Bottom of the box, top of the box, and now a break. So we've got here we have a $25 consolidation, right? From 220 to 245, $25, and now we broke. So $25 from 220 puts you at 195, and the significance there is then you're back in the $40 wide consolidation range, and once you break 205, my base case would be bottom of the box back to 165. Now there will be opportunities within this box. I would expect either a hesitation or a bounce at 205. Then we've got a level at 190, and then we've got a level at 180. So there's intermediate levels within these trading ranges where you could see, like I said, either a hesitation or a bounce. But the main thrust of the technical argument is we came up, we challenged, could not hold it. Bulls ran out of gas. Bears were able to break it. And then first of all these people now know they're wrong. They were hoping for the breakout, didn't get it. That's going to provide fuel to the downside as those people exit their positions. And then at 205, then you're going to get all these people that bought in the 165s. They're going to be saying, hey, we got this pullback, but, do I want to give up all my profit and just hang on? Or do I want to take what I can get? I'm still up from my buys at 165. I still got 40 and the market's falling apart, so I'm going to exit my position. And then that's the horsepower to the downside on Netflix. SMH, I mean, disaster chart, really. We had the $10 wide consolidation. We talked about the little bear flag yesterday. Unfortunately, if you weren't in it prior to the open yesterday, you were met with a gap down. And that, by the way, often happens, right? Bears are thinking, okay, on the break of this bear flag, I'm going to get short. Well, the market doesn't give you that perfect entry. So it gapped down and then oscillated here, but plumbed down to this 175. And that was our measured move target on the break of this $10 wide. So you had 10 from 185 right down to 175. If we go and look at the daily chart, what I've done is extend these downtrend channels, and we're right here at the bottom of the channel. We'll have to see how price handles that. Does it bounce here, or does it cut right through it? But you can see major downtrend action. I want to show you the weekly chart here. We are coming into we're right here at the 618 retracement. We do have a little support coming in here at 170, really between the low 160s and really $10 wide. I would call it a band of support that would bring us down to the bottom of the weekly channel. And, at some point, I would just think you're going to get a technical bounce at some point. But big picture, keep in mind, pre-COVID high was 150, and we're trading, 175. So really, there is more downside available if the whole thing falls apart and everything goes to the pre-COVID highs. ARC-F, right at the bottom of the box here, I'd have 15 alarmed. If you sense, PPI or CPI, if you sense a rally is afoot, I mean, you're at support. You're supposed to buy it here, right? Buy support, sell resistance. You're right at a very objective level. You could put your stop just below 15, wherever you feel comfortable. Maybe you can pick off the low of yesterday, which was 1472. And if you get the sense there's a rally, you're at a very objective level to buy it. And then if you get stopped out and you're below 15, then you reverse for a very objective short against 15 with a stop just above. Really, same thing here with ARC-G. You are at a very objective level here at 3150. I mean, if it doesn't hold here, you're at the midpoint of the channel. You're at a prior low. You are at the highest volume over price bar on the chart. If it's going to hold, it's going to hold right here. So if you sense a rally and you want to participate, in the ARC stocks, you got a perfect long setup as long as 3150 holds. And then if the whole thing falls apart, you reverse, and then you're looking way down towards 28, 27 on the downside. Same idea here on flagship fund. You're at or near the prior lows back in May. Right here at 36, tag a 36. We're trading 35.65. If if there's a rally, you can buy the recapture of 36. If you're short already from maybe up here and you've ridden it down, or even if you took a short yesterday at some point, maybe on this rally, or when it dropped below 36, then you've got your stop just above. And if there's a rally, I would recommend, as I always do, to honor your stops there on any kind of recapture of 36, and then you get stopped out. Just take your trade off at that point. ARKW, different situation here. It's already broken. So if you got short on that breakdown below 46, you're in good shape. What I would do, well, it's up to you. You can either, maintain the stop of, where you entered, probably right here on the break of 46. Hold your position unless you get, of course, stopped out. Or you could trail your stop down, and, if you sense there's a rally, you can stop yourself out at some point, where you're still profitable. If you sense that we're going to get, a kickback rally of some sort, you don't want to, if you get the sense there's going to be a rally, then you can decide if you want to take it off with a small profit, or you just want to hold tight for a possible breakdown back test and then fail that very common move. So let's wrap it up there. You can see from we went over it yesterday, we went over it today, some really critical levels coming up on the downside. I do think the PP, it's going to be coming fast and furious now. We've got PPI today, CPI tomorrow, retail sales Friday. We've got the Fed first week of November, and then we've got the election. And that in itself could be a massive, massive catalyst if there's, an election result dynamic that could be a force for an end of year rally. But we'll have to see. Then you've got another Fed meeting, I think around December 15th. So lot of macro coming our way. And one thing I wanted to mention also, earnings ramp up on Thursday. We've got some banks reporting, and then we've got a bunch of banks on Friday. What I wanted to tell you, and I made a note of this in the trading room yesterday, watch for downward earnings revisions, and also watch for global companies that derive a lot of their, a significant part of their revenue outside the United States. You're going to see that the hit to earnings for FX, strong U.S. dollar. So you sell something in Europe for X amount of euros, and then you got to repatriate that money back to the U.S. in a strong dollar. You lost however many percent because of, the dollar strength. We saw that from Microsoft in the summer. You're going to see it again. All these global companies are going to report their earnings, but then they're going to give you that, well, it would have been this, but we had FX charges of that. So be cognizant of that if you are trading these big S&P 500 names with that have global reach. So let's wrap it up there. If you're new to the channel and you appreciate technical analysis with a game plan every morning of the key levels, the key pivots, and how you may want to trade these names that we keep in focus each and every day, hit the subscribe button, the alarm bell, and then do yourself a favor, jump over in the show notes where you'll find a link to the blog site where you can drop in your email address and get all my content morning, noon, or night right to your email box. You won't have to hunt for it. And for the rest of you, thank you so much for the support. I really appreciate it. Good to have you along for the ride, and I hope you've been doing well on your trading. So let's wrap it up there. This has been Chris Best with Traders Profit Compass. Talk to you next time.